Hello, everyone, and welcome back to another episode of the Let's Get Technical series. This week, I am late. Usually, I go live on Wednesday, 5 p.m., but today on Thursday, I'm recording this video because I've been a little bit under the weather. So, today we are going to answer some of the stock analysis requests which have been submitted by our viewers. So, stay tuned as I take you through the analysis. And if you want to also submit your stock analysis request, all you have to do is visit the link above my head and submit the forms. So, let's get started with the analysis. So this is the first talk of the day, and this has been requested by Jaswinder Arora ji. He wants the analysis of HAL. He is looking for medium to short-term analysis. Now, HAL, as you can see, is currently in a pretty good downtrend, and we are looking at the 75-minute time frame. What stands out to me is that here, when the stock created a lifetime high, the RSI on the 75-minute time frame gave a negative divergence. Even before giving the negative divergence, the stock gave a breach of the positive range by breaching below the level of 40. So this was an early signal that a trend reversal is very, very likely here. Now, if you've been watching my videos and if you've especially been following my market outlook series, which comes every Friday, I have been warning you against investing in PSE sector. So here we can see that a structure breakdown has happened. So when the stock was in strong bull trend, the RSI was respecting what I call the positive range very well, which is taking support at 40 and breaking above the level of 70 repeatedly. Now, since the stock has gone into correction, first there was a negative divergence, and now there's a negative range shift. What is the negative range? Negative range is when the RSI is consistently taking resistance around the level of 60 and breaking below the level of 30. So that is what we are seeing. Until and unless the stock doesn't establish a proper positive range on the 75-minute time frame, you should steer clear of the stock. So if we go back to the past to take some inspiration, this is where a correction last time ended. And if you see, the stock went very well above the level of 60 into the 70 plus zone, gave a pullback on the RSI itself, which was a very good entry opportunity, and continued to rally upward. And this phenomena can be seen multiple times. So if you want to do medium and short-term trading, I would suggest you follow the 75-minute time frame and wait for the stock to break above the level of 70 on the RSI of the 75-minute time frame, RSI 25 period, by the way, not the standard 14 period. So here what I can do is set an alert at the level of 70.8 on RSI 25 period on 75-minute time frame on the basis of closing price. So here I'll just write higher high, HH stands for higher high. And when this gets triggered, then I will know that the stock is maybe ready for taking long positions. I will come back and assess. Here also on the price, also I have set a higher high alert right above the most recent peak. This alert is not equal to go ahead and purchase the stock. It just means that you need to be patient, you need to assess, maybe wait for a pullback. But let's just take things one step at a time. Last time also, if you saw, when the correction happened, the 20 and the 100 EMA, that is the blue line and the green line respectively, converged. Even before that, when the correction ended, there was a convergence and then continuation of the uptrend. So right now, a convergence has already happened. In fact, a crossover has happened, but we should wait for a confirmation on the upside before we take a position. Now, taking a look at the daily time frame, what I can see is that on the daily chart, earlier we had seen a negative divergence, small correction, rally, again negative divergence, but this correction seems to be continuing. This correction seems very similar to the correction that we saw here, where again the daily time frame did what? Tested the bull range, that is, took support at the level of 40 and turned up. So here also you can see I have an alert set already which says higher high above the most recent peak on the RSI of 25 period set on the daily time frame. So currently short-term analysis suggests that the stock is in bear trend and is not suitable for going long. So Jaswinder ji, here you are currently already holding the stock at 4650. So you seem to have bought into the stock a little prematurely. So I will suggest a stop loss level for you here. I think this low is a very important stop loss level. And if we draw the Fibonacci on this, basis the Fibonacci, this is below the 50% retracement. Now, this stock is a super trend if you look at the past, which means that it has been trending upward without giving any deep corrections. So here, if it does start to give a deep correction, then it is better to secure your capital than wait for recovery and exit the stock. If you also look at the current market, broad market structure, it does not look very strong. So I would suggest you to actually not even maintain the stop loss since the stock is in bear range and is expected to go down further. I would suggest you exit your position with whatever little loss you're experiencing right now and then re-enter the stock when a proper uptrend on a short or medium term has been established. Now we'll move on to the next stock query. So the next stock is IFCI, submitted by Rishabh, and his cost price is 73. So the yellow line is a cost price at which Rishabh has bought IFCI. Now again on the chart of IFCI, what I can see is the daily time frame is showing a massive negative divergence. This looks like a little bit of a FOMO purchase on your part, Rishabh. Last time also, if you see, the stock on the daily time frame showed a negative divergence and then went into a pretty deep correction, which from a short-term perspective can be pretty damaging. And in your question, you have asked whether you should exit or hold, whether upside is possible, what is the target, whether you should add more, and if yes, then which price, and what stop loss should you maintain. So right now your position is at a loss. This is also a pretty illiquid stock, and from your comment, I can assess that you want to trade in the stock from a short-term perspective. May not be a very, very good idea. So see, this was a good time to buy the stock. When it gave a positive divergence here, right? It gave a positive divergence here, and then the stock went into a positive range shift. But you've purchased the stock after the creation of this somewhat double top formation here. If you look at just the close prices, this is like a double top formation, which usually is a signal that the stock is losing momentum. And the momentum indicator RSI also indicated that the stock is losing momentum with a negative divergence. Since then, what has happened? The stock has gone into negative range. How do we know that? The stock has corrected, breached the level of 40 multiple times, and right now is like absolutely in a breakdown. So I don't think it's a good idea for you to hold the stock, because considering that the stock has already given a massive rally of 9x in less than 1.5 years, there is a pretty good chance that the stock can go into correcting this entire wave. Even a 24% retracement means the stock can see further correction of almost 16%, which I'm sure is not something that you want. Also, if you see, the stock has broken below the 100 EMA, which is the green line, 100 EMA of the daily time frame, which is the green line. Last time, if you see, after a strong uptrend over here, when the stock broke below the 100 EMA, it went down 35%. So that is not a risk that you want to take. And whether a pullback like this is going to come or not is very, very uncertain at this point. So the chart structure is suggesting weakness here. But let's also take a look at the 15-minute time frame. Now, on the 15-minute time frame, I can see that the stock is down to the level of 30. But here, some bounce back can be expected. I would expect the stock to kind of retest at least the 20 DEMA, that is the blue line here, and give you a possible 10 to 11% upside. Do not make the mistake of averaging the stock here, because the broad market structure is also pretty weak and you don't want to take the risk of exposing more capital to a counter where you're already experiencing loss. That's very bad discipline and very bad practice in the market. Don't add more money to something where you're already losing money. It's like watering weeds in your garden, right? Which is completely against the goal that you want to ultimately achieve in the market. So what I would suggest is set a target for now around the level of 69.7 just to be on the safer side, and exit the stock when that is achieved. A small bounce back may be expected, but the overall chart structure does not suggest that this is a good counter to hold on to. Thank you so much, Jaswinder and Rishabh, for submitting your stock analysis requests. And to all the other viewers, if you also want your stocks to get assessed, visit the link at the top of my head, expinvest.in/stock request or /stock analysis, and I'll be more than happy to assess the stocks in the next video for you. Until then, I will see you again on Friday with the Market Outlook series, or maybe Saturday, it depends on my health. But I will see you again with my analysis of Nifty, Bank Nifty, other sectoral indices, and the intersector analysis. Thank you so much for joining in. Namaste.